Hi, it's Brad Purvis from Duncan Dovico and Below the Bottom Line, and I'm delighted to introduce Mike Hawkins. Mike is Chief Investment Officer and Director at Evans & Partners, and today we were fortunate enough to have Mike addressing us, a number of our self-managed superannuation trustees and members, really with an economic overview of his views and insights on the Australian and also global marketplace. So I've just grabbed Mike at the conclusion of our session. Thanks, Mike, for joining us today.
No worries, Brad.
And a couple of quick questions. Your thoughts on the Australian marketplace and our competitiveness?
Yes, it is a big topic. I keep saying that a lot of our clients and your clients are no doubt scared about Greece and Spain, but I think they should be more scared about Australia, because we are, as we're reading in the press every day, the commentary from the CEOs, we are so brutally uncompetitive, and we've got there slowly and incrementally over 10 years. It's not just the currency, it's not something the last 18 months. So we've dug this massive hole for us, and I'm struggling to see a way out of it that doesn't involve a pretty material downturn at some point, in which case, in a crisis environment, the hard decisions start to be made. So from my perspective, the riskiest thing an investor can do at the moment is actually be 100% exposed to Australia.
Well, that leads us perhaps into global markets. I know during your presentation today you were talking about the importance of global markets and even the opportunity. So that's something that you're fairly positive on? Oh,
look, I think it's a once-in-a-generation opportunity. I think there is every investor, regardless, the most conservative, the most aggressive, regardless of tax-paying status, needs to be diversifying overseas at the moment. You'll be diversifying away from the issues with Australia I talked about, a very limited equity market in terms of, I think, the growth potential going forward. You'll be investing in far superior quality companies in terms of the average company in Australia, investing in cheaper businesses, and you'll also, I think, be utilising an extremely valued Australian dollar to get exposure to these opportunities. The one thing we did discuss at lunch, I think, was a little bit contentious, came as a bit of a surprise, but we just made the point that income investors are not automatically going to be worse off, particularly in the medium term, because dividend per share growth is critical for any equity investor. That's what drives your income flows ahead of inflation over time. Now, we've had very good dividend per share growth in the Australian equities over the last 20 years, particularly across the top 20 stocks. I think it's going to be a fraction going forward. So the dividend per share growth in overseas companies, I think, will be far superior.
Interesting, really interesting observations. And again, for our clients who do get an opportunity to join us at these sessions that we're conducting, the likes of having someone like Mike Hawkins available to speak to you and give you his insights and observations is just terrific, and just another value add that comes with being a client of the practice. In conclusion, topic that's on everybody's mind, Mike, I think, is interest rates. You nearly pulled a crystal ball out. What's your view?
I've been saying for 18 months they'll keep cutting rates until we get the currency down. The currency is the thing that's doing the damage in the economy, not interest rates, but the only tool we've got is to keep cutting rates. I'm surprised it hasn't come down already, but we're at 3% now. And if the currency stays up in the new year, I think we'll continue to see easings.
So maybe there's another couple of cuts there, you think?
There could be another couple of cuts. But what we're seeing on the currency side now, our trade position is starting to get worse because the commodity prices are falling. So I think that issue might start to impact the value of the dollar in the first half of next year.
Terrific. Well, look, we won't take up any more of your time. Again, if you get an opportunity to come along to our sessions over the course of 2013, there'll be many, many more. There's a strong likelihood that you'll get the chance to meet the likes of Mike Hawkins. So again, to all of our clients, we wish you a Merry Christmas and a Happy New Year, and we look forward to seeing you in 2013. Thanks.